morning, Tony Virtue here, and I'm in the Manly office today, so greetings and welcome. I wanted to touch briefly on the situation over in Russia. I know we've had a number of clients ring about that. This actually reminds me a little bit of the issues in the past between Russia and Georgia. And I was actually in Moscow at the time, which was about 5 years ago now. Very interesting to see the different dynamic when you see it from a different point of view. The Crimea's gone on for a long, long time. We fought wars over that, as many of you know. The likelihood with this is poor for markets in the short term. I had visited Gazprom, which is the main oil company that distributes down there. So not good in the short term, and there's a lot of scores to be settled. The probability will be that they will sort of, through some brinkmanship, sort this out. This is not a new set of circumstances, and a lot of those borders are very artificial. There will be some arbitrage in the markets. You will see some of the fund managers shorting some stock and trying to make a quick dollar. So I think the message here is that at this stage, there will be some brinkmanship. It will be probably a similar outcome to the situation 5 years ago, which is that there will be an unholy truce and a bit of chest beating. But ultimately, it's the economy stupid. They do need to keep their oil flowing, and they will find a way through this. From a market point of view, though, probably won't be too terrific for a little period of time. So we'll just see how we go there. The interim results are all out now for Australia. Pretty strong. Probably the most defining area has been the growth in dividend yield, and investing in shares, which has traditionally been regarded as a growth asset in Australia, rapidly now becoming an income play, where the income from the ASX 200 at 4.5% plus franking credits is greater than the money we're getting on term deposit. So the only reason you wouldn't own the shares is if you thought A, the dividends would retreat, or B, the share market would go down and stay down. So you are seeing a rotation from fixed interest, where best case the returns are going to be single digit, to growth shares where there is some potential for some upside. Companies like Flight Centre, companies like Ramsay Health done well, Virtus, which is a medical company, looking okay. So some good signs happening there, and for companies that have adapted and moved from, if I can say, the old economy, the old way of doing things, and have upskilled themselves, using the internet wisely, grabbing some efficiency, much of that change is already being done now. So I see that as an upside. We recently had some Chinese across, recently as last week, so definitely trade picking up and visitors picking up between China and Australia. There's a little graph to show you that in my presentation. So Australia, with only 23 million people, still a good place to invest for 7 billion people around the world. We just need to evolve and develop products and services that people are happy to pay for in a transparent way. Locally, we're as busy as ever, and we look forward to looking after your interests as ever. There will be quite a few new capital raisings soon, so I'll be looking out for you there to see if there's something that would suit your risk profile. That's enough for me today, and